All right, hello, and welcome to Camel Finance. I'm your boy Camel, and today we're finally here. Today is FOMC day. We get to find out whether or not we're going to see a 25 basis point hike. We get to find out whether or not there's going to be language of a pause. We know that from hopping into the CME probabilities, we are now sat at 99.9% chance of a 25 basis point hike. So anything other than a 25 basis point hike today will see the market shift massively. So I think the expectation for me at least, and it seems to be consensus in the market, is that we would get a 25 basis point hike and hawkish language. But since everyone kind of expects hawkish language to couple and accommodate this 25 basis point hike, does that mean the market can still rally even if they are hawkish? Has the Fed lost all credibility? Quite possibly. Something to keep in mind is if they pause, and they come straight out and admit they're going to pause, which I don't think is likely, although I do think they pause. I just don't think their language is as explicit as we're ready to pause now. But if they do, I think markets will fly. I think they will fly anyway because they're going to front run this pause. However, we get any kind of excessive rate hike, so a 50 basis point hike or anything like that comes out, and the markets are going to correct very, very sharply to the downside. So we need to see a 25 basis point hike, or things are going to start to get quite ugly quite quickly. I do expect hawkish language, as I've said. And if you've been watching the channel for a while, you'll know this seemed like an absolutely berserk call a very long time ago when we started to draw this head and shoulders pattern, and we hadn't even made this rally yet at the time. Okay, we hadn't even completed this. We took a trade out of here and we ended up getting stopped out here. And for a while, this whole thesis seemed kind of crazy. All the way back here when the market kept making new lows, people did not think that new highs were ever coming. Yet here we are, currently broken out, currently just a few points away from taking out these local highs. We have indeed ticked off the 50 basis point hike. We seemingly are going to tick off the 25 basis point hike today. And then we get to find out whether or not that's the final one. Maybe they've got one more to do. And most importantly, we get to find out, are we about to rally out of here like the melt up chart indicates, or is this going to be some sort of rejection? This will form part of a bull trap, and then things are going to get really, really ugly really quickly. So the good news is, even though nobody knows, including myself, we will at least get to find out over the next couple of days. It's also important to point out, on Thursday, after we get through FOMC today, we've got Apple, Alphabet, and Amazon all releasing their earnings tomorrow after the bell. So it will be very, very important to see what happens here. These three carry a lot of weight in the indexes. Of course, if they can hit expectations or exceed them, then we're likely going to see the indexes carried higher, and the inverse is true. The whisperer of the Fed has given us a hint/leak. The Fed officials are closely monitoring this employment cost index, which just came out below expectations, and the quarter over quarter is dropping. This is dollar bearish. Rates will drop hard as the Fed is more likely to pause its hiking cycle. And this is what the bond market has been telling us for a while. Again, if you're not new here, then you will be more than familiar with this concept of the bond market calling the Fed bluff. The last two things I want to point out on this before we move on, okay, is the S&P 500 rally has been squeezing out the shorts. Small speculators have been betting on downside in the market at record levels, and you can see that here. And this continues to be the thesis. So many people think that this whole notion that we're going to break out and this breakout's not going to form a trap and we're going to be at new highs very, very quickly. Most people think this is absolutely bananas. Yet, if you look at the smart money, it is betting bullish on the market, as you can see here. At the same time as we have record amounts of shorts from small speculators, from retail. Retail has never been more one-sided than we are now. The smart money is positioned opposite to retail. This is exactly what you want to see to upset a lot of market participants. So if you want to get the update, if you want to make sure you understand how I'm positioning as a pro swing trader out of the FOMC and out of earnings tomorrow, then make sure you subscribe and hit that notification bell. And I'm now going to move on from FOMC. I've been saying all week, really, that there's not a great deal of weight that I personally put on any price action that happens between now and after Thursday. I want to see those earnings. I want to see how the market closes on Friday. From there, we'll have a direction, in my opinion. But in the meantime, I think everything that we see from the prices is mostly noise. So I'll be looking out to Friday's close, and we'll take it from there. Here in the UK, though, okay? Insolvencies in England are at 13-year highs. The UK deficit is now at a record. Credit card borrowing in the UK has soared to its highest monthly level since 2004 in November. The taxpayers in the UK here are on the hook for $157 billion to cover the Bank of England's losses. Things are getting wild. And so the reason I point at this is all paths ultimately lead to your pension being stolen, your bank account being frozen in the reset, and massive inflation in the not too distant future. Remember, just at the end of September last year, we saw the bank have to print money in the middle of a rate hiking cycle to bail out the pension funds because they got margin called, okay? And since then, I've been talking on and off about this notion that they're likely going to steal the pensions. It's not even my idea. You can see many people like Robert Kiyosaki talk about this. They're going to steal the pensions. They're going to freeze the bank accounts. If you are following the reset, if you're aware of this sort of thing, then this is not news to you at all. If you've been on the channel for a while, this is not news to you at all either. And if you are new here and you don't know anything about this, then I've got plenty of content you can go and check out. But the reason I bring this up is because I've been saying on and off that they're likely going to steal the pensions, they're going to freeze the accounts. And we're seeing this now in France, okay? They've started to implement things called like pension reforms. So this is just the tip of the iceberg and things are only going to get worse. But you can see here that today there are record numbers of people protesting in France. More than 1 million people in the streets due to this Pension Reform Act, and this is going to be a trend that continues. Another trend that's going to continue is what's happening in Lebanon as of today. Today, Lebanon are going to devalue their currency by 90%, and this is why you own gold. But the reason I bring all of this up, okay, is we've got this theme, haven't we? We've got everywhere in the world with too much debt. We've got this theme of pensions blowing up, and we know that they're likely going to be stolen and frozen in the reset, and there's going to be more and more of this civil unrest as a result of that. Remember, all paths lead to higher inflation. Even though we're in a period now where CPI is coming down worldwide, inflation is cooling off worldwide, it's a pendulum that swings from one side to the other. And it's because of these factors that I've shown you so far, all paths eventually lead to further devaluation and debasement of fiat currency. This is indeed why you own gold, silver, Bitcoin. But it is important to point out that you must own this ahead of the time. It's no good waiting for your currency to be debased by 90% and then deciding, oh, maybe I should have some gold, okay? So exit the system whilst you still can. Just a friendly reminder, this is what Bitcoin mining looks like on the left versus gold mining on the right. So here you can see the Bitcoin miners are being used to heat a polytunnel, a greenhouse where they're growing plants and vegetables. So not exactly a bad for the environment look that Bitcoin often gets accused of being. The more you look into Bitcoin, the more positivity there seems to be for the future of humanity. Strike now lets 60 million Filipinos receive instant zero-fee remittance payments in local currencies with the Bitcoin Lightning Network. At the same time, over in Hong Kong, they are working to become Asia's Bitcoin and crypto capital. And German bank, Decker Bank, is going to offer Bitcoin and crypto to over 1.5 million clients. Do you see where this thing is going? Every single day I make one of these videos, and every single day there's more and more news like this. Bitcoin is showing no signs of slowing down whatsoever. Over in El Salvador, they will soon be debt-free and IMF-free thanks to the Bitcoin bonds, according to Max Kaiser. And this is absolutely true. Thanks to these Bitcoin bonds, so these are bonds that correspond to Bitcoin that is mined via harnessing the energy from volcanoes. This allows nations and countries such as El Salvador to raise money via the issuance of bonds, and therefore they're able to say no to the likes of the IMF. Remember, the IMF like to indebt these small nations by waiting for them to need a bailout and then being the only person to offer them a bailout. And often that bailout is deliberately issued, knowing full well that they will never actually be able to afford to repay it. This, of course, puts the nations like El Salvador in the pockets of these entities like the IMF, just like a mafia or a cartel would. So therefore, Bitcoin really is hope at self-sovereignty for these smaller countries and nations. And we're seeing that with El Salvador leading the way and being the pioneer in adopting the Bitcoin standard. So, as I've been saying all week, I kind of think most of the price action that happens in the meantime between now and Friday is noise. But undeniably, when we get rejection at technical levels like we've had here in the dollar, it's important to acknowledge these changes. So, here we are with the dollar, okay? I pointed out a couple of days ago, we've got this double resistance. This was support in blue that goes all the way back here. We have flipped that to resistance now, and we've got the orange downward sloping trend line here, which apparently is also being respected as resistance. So looks to be rejection at double resistance, looking to resolve lower. Of course that can change and that can change quickly, but it hasn't changed yet. This has meant gold continues to press on upwards. It continues to hold above this orange support line here. So we almost got stopped out, as you can see here, almost got stopped out, but we didn't. So we're still in for now. We're still long, we're still strong with half our position, and we continue to push. Not much happening with silver. We can extend this box out a bit like this. A break above the top of the box is fine. If not, I'd like to see this thing really have a dive down and trap all of these late people that showed up to this and all the crypto influencers that have only just started talking about gold and silver over the past couple of weeks, as opposed to all the way back here when they should have been talking about it. So that remains to be seen. I ducked out of these minor positions and possibly too early, but that's okay because I had to respect the technical breakdown that occurred via this orange line. So currently not holding any of those. If I hop into a Bitcoin chart, things start to get really, really interesting, okay? I've been talking about this drop into a half cycle low, which hasn't yet occurred. But if I hop into this fractal chart here, flip it onto log, you can see that we kind of did the same thing. Whilst we've gotten a bit ahead of this fractal over the past couple of weeks, we still kind of made this high, ground up, and now we're right around the window where we could potentially expect us to drop down into this mid-cycle low before we resolve to the upside. So I haven't ruled this out. We also don't have to have a mid-cycle low, but I think if it's going to occur, this would sort of mirror the prior time that it did this. So again, I don't really put much weight on fractals, but this is undeniably following rather closely at the moment. So that remains to be seen. If we don't get one and we start to resolve to the upside, then we'll just say that we're not having one. But I'm still kind of open to seeing a drop into a half cycle low for Bitcoin. And of course, that will be mirrored across the rest of crypto, I would imagine as well. The last couple of things I wanted to point out is the yields continue to be under pressure. And here's the 2-year yield, okay? Still continues to be under pressure, still does not believe the Fed going to continue to aggressively hike rates. This has been calling a Fed bluff for a long time. The Fed funds rate is currently above the 2-year yield. Whenever we've seen that historically, the Fed has moved to a pause in rate hikes. So is this time different? Are we going to see that? We'll get to find out at today's FOMC. The last couple of things I want to point out is, look, XLC continues to move higher. This is good. This is a good look. We're seeing Geo continue to kind of grind its way up. Also a good look. ARKK, no position as of yet, but it has made it to the top of this box, okay? So expect me to tell you that we're looking for longs if the FOMC today and tomorrow's earnings prove to be positive for equity markets. Got Apple, again, continues to kind of break out, doesn't it? Doesn't look too bearish to me. Tesla continues to be a long and strong, continue to push from me. The UKX. This is why we use trend lines, and this is why we respect the trend lines. I need to flip this off a log so we can have more precision. But here you can see a couple of perfect touches. We now appear to be attempting to resolve higher. Not sure the validity I put on this trend line, to be honest. The market doesn't seem to be respecting that level, but I'll leave it there for now. So hopefully we can get a continuation to the upside here, targeting 8,500 and a touch of this upward sloping red resistance line that goes all the way back here. That, of course, remains to be seen. And as I keep saying, break down from this red upward sloping support line, and I will have to cut that trade because that will be technically damaged. The last couple of things I wanted to point out are the VIX. Okay, the VIX has been an incredibly useful tool for me. The VIX continues to get rejected at this red downward sloping resistance line, as you can see here. There's been a few times, I've modified this line a couple of times. There's been a few times where we started here and then we got a wick above and I connected that wick and then I moved it again and I moved it again and we sort of ended up here. But there's clearly no breakout here. There's clearly no volatility event shown up just yet. And this is why I've been able to stay on the right side of the trade and remain long in equity positions, because the volatility has not broken out. The VIX has not spiked. There is no fear in this market. Even though retail are record bearish and record short and super scared that we're going into a recession imminently, the VIX has been telling us the truth. Now this can change and it can change quickly. Break out of here and things can start to get very ugly for the stock market. And perhaps that is going to start today at the FOMC. But if this continues to do what I've long suspected it will, which is slowly grind down here, then we're going to get this validation in the melt up. We're going to see this thing unfold and we're going to see this thing validate and confirm. The Dow Jones is still in no man's land, as you can see, but undeniably, it's had ample chance to break down here. It didn't. It then came in for a retest here and made a higher low. And now we're just a few points from the top of this range here, from this red resistance line at the top. Break out above there and things are going to get very bullish very quickly for the Dow. Hopping into the Nasdaq, again, still holding all of these levels, isn't it? It's still above this big green level. It's still above this downward sloping red resistance line, and it's still above this orange uptrend line. So as far as I can see, this is long and strong, continue to push. Again, it does not mean that this could not form a trap that rolls over, and if you're a bear, that's what you want to see. But if FOMC turns out to be bullish today, and if Amazon, Apple, and Alphabet end up hitting earnings or coming close to them, then I would expect this is going to pop up to around 13,000 very, very quickly. And of course, that move would trap a lot of people offside. Just like this move in gold back here trapped a lot of people offside. And just like this move here in Bitcoin trapped a lot of people offside. This is what markets like to do. And this is what my expectation is for the stock market. If I hop into the S&P 500, it's the same sort of deal, isn't it? We're just a few points away from taking out this, validating that on a weekly time frame, this pullback here was indeed a half cycle low, and now we're looking to form a right translated weekly cycle. So things continue to look constructive. Of course, as always, we have to take things one day at a time. We also have to keep in mind that things can change, and things can change incredibly quickly. But as it stands, so long as we can get through this volatile period over today and tomorrow and look out to the rest of the week, look out to see how the closes are on Friday, as long as the market doesn't believe the hawkish language that I'm sure the Fed will use, and as long as we don't see a surprise 50 basis point rate hike, I think we have a very good chance at leaving behind these bear market lows. I think we have a very good chance of being on the right side of one of the biggest and most profitable trades of the year. And I think we will have done very well at calling a bottom when nobody else thought a bottom could form. So if you want to continue to get updates on all my trades, if you want to see how I deal with these markets in real time as a pro swing trader, if you want to get free trade ideas and setups called well ahead of time, make sure you subscribe and turn that notification bell on. Drop a like if you appreciate the work today, or indeed if you found value here. And until tomorrow, all the best from me. Take care. Cheers. Bye.